Hello everybody, welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As we get started, let's do a quick systems check. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. Okay, great, looks like we're up and running fine. If anyone has any issues as we go along, feel free to let me know. As always, keep in mind that there's risk with each and every trade you take. No one trade is guaranteed to profit. So you want to manage risk on the downside in one way or another. A lot of times it's with a stop loss, or there are some advanced functionalities on our web trader and AvaTrade Go mobile app that we'll look at as well, like AvaProtect and the trade calculation feature in the order window. All of these things can help with part of your risk management plan, and so we'll go over some ideas in that regard. Keep in mind as we go along that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, real quick for those traders that are new to things, what is fundamental analysis? Basically, it's the news. It's what you see going on in the headlines or in the economic announcements as they come out from the different economic calendars that are out there. We can refer to this news as regular economic news if it's scheduled on an economic calendar, let's say. We know exactly what the news is, when it will be, what country it's from, etc. And then there's the other type of fundamental news that's a bit more unpredictable, what we might call extraordinary economic events. These are things like the Russian invasion into Ukraine, and who knows what the next big thing will be that we weren't expecting. This type of fundamental news you can't prepare for in terms of the timing of it exactly, but you can prepare a lot of times with pending orders beyond certain price levels or at certain price levels that you expect. If big news does break, it could maybe move an instrument in a certain direction for a certain distance. And so pending orders can just be kind of like trip lines out there waiting for trades to be triggered in case big news does hit that might move gold or that might move crude oil or a certain stock or a certain currency, etc. And so we'll go through some of those ideas today as we go through the web trader and the tools that are also found on our app that can help guide us in that regard. As we go along, if you have any questions, please feel free to let me know in the chat box. Type your questions. If you have some input you want to share with others that's pertinent to what we're talking about, please feel free to do that as well. Now, real quick, if you're more on the go with your trading, then you could use our mobile app. It's found here under trading platforms, AvaTrade Go. And what you'll see when you use our mobile app, it has the same functionality as our web trader. So you'll see AvaProtect, you'll see the other tools that we're about to go over in the web trader are available on the app as well. So very nice functionality, very nice features. Now, if we want to work, say, from your computer on a full screen, then you log in here and you'll be in the web trader version of what you see in the mobile app. And so since we're talking about fundamental analysis, it makes sense to start with some of those tools that are available for you that can assist you with your fundamental analysis. And so because we have some large economic announcements coming up today, and remember we said that was one of the types of fundamental news, scheduled events, let's take a look at how the web trader and our app can help you formulate a trading plan based on that fundamental news. Okay, so and it can be news that already came in, or it can be news that's going to come in, and we'll kind of maybe try and take a look at some examples of that. So if we go to the Trading Central features, you'll see the economic calendar is listed there. And I know many of you have probably used economic calendars, and you're thinking, well, what's the big deal? It's just going to tell me when the announcement is scheduled and what the announcement is on. And you can find economic calendars in lots of places that do that for you. So what's so special about us having an economic calendar in our web trader or in our app? And my answer to that would be a lot. There's a lot special about it because there are features built into this calendar that you won't find anyplace else. And so what I mean is it's interactive. We can take a look, besides obviously picking specializing what countries you want included in the calendar. You don't have to look at all of the announcements. You can kind of pick and choose how you want it to be displayed. But beyond that, we get into the real special tools, which would be, as an example, the Bank of England has an interest rate decision coming up very soon today. It's 2 p.m. my time. So in about an hour, a little less than an hour, there's an interest rate decision out of Great Britain. Now the expectation is it will be raised from, as it says here, from 2.25% to 3%. So what they call 75 basis points, or 0.75%. Okay, and you might think, well, okay, what if the numbers come in as expected at 3%? What should I expect to have happen? How do I know what to do with that if it comes in as expected, or if it comes in higher than expected or lower than expected? What do the statistics show me should happen? And how far of a distance would I expect the movement maybe to be? And so that data is compiled for you by our economic calendar. You don't have to take the time to try and pull up the charts from past months, looking back and trying to figure out when those announcements came in, what kind of movement occurred, and what was did the decision come in as expected or different than expected. We've compiled all that data for you. So if I click on, let's say, volatility, I can say, okay, first of all, which currency pair do I want to look at? Okay, it might make sense to look at GBPUSD since it's a Great Britain announcement, and you know, pairing it against the USD seems to be a common pairing. So a lot of times when you're trading, you want to trade on something that you expect to have a large volume of traders, because that helps as well with price action and movement potentially. So, but you choose the pairing that makes sense to you. You choose the length of time that you want to analyze after the past events. So when the numbers came in, you want to know how much movement and in what direction did it go. If you're looking 1 hour after each event, or 30 minutes, or 5 minutes after the event, depends if you're scalping a 5-minute move, or are you looking at a longer time period, like 4 hours after each event, which is what I'll use as an example here. It's more my comfort zone. And so as we look, then we say, okay, if we look at all of the events, that means whether they came in as expected, higher than expected, lower than expected. We're not delineating. We're saying all of the past events, looking back, we see there's 8 events included with interest rate decisions, 8 of them. 63% of the time, the pound dropped after the decision. Okay, but that's a pretty general look, because we don't know how did the rate come in. Was it as expected or not? So maybe it makes more sense to say, okay, well, okay, I do see that the majority of the time with these rate decisions, the pound dropped. Okay, now let's say, well, what if it comes in as expected? And most likely that's what it'll be, right? Usually it comes in as predicted with these interest rate decisions, but not always. I'll make sure we throw that in there. It doesn't always come in as expected. It usually does, but not always. But I think they're pretty confident that it could come in at 75 basis point increase, which is what the US just did as well. So if it matches the forecast, what then has happened with the movement? 71% of the time, and we're looking at 7 events in the past year, 7 times the interest rate decision matched what was expected. It either stayed the same as expected, it went up as expected, or it was brought down as expected. But basically what this is showing you is, if it came in as expected, then kind of the excitement about it maybe resulted in a pullback. We see 71% of the time the pound dropped if the rate decision came in as expected. 71% of the time. So that might tell you something. You might decide, okay, I'll wait. I'll see if when the numbers come in 50 minutes or so, and I'll see it, does it come in as expected? And if it does, if it starts a downtrend, maybe I'm confident because of this data that then I'll sell and I'll put a stop loss somewhere up above where I think it's a safe determinant of whether that trend is reversing or not. And I'll put a take profit. How far away might I put my take profit? Well, look, it tells you right here. The average range after the event within the 4-hour period was 153 plus pips of movement. So maybe you say, okay, If I wait for confirmation of a downtrend and then I enter and it's already moved 25 pips down, then maybe I'm safe saying I'll take profit after another 100 pips, because that would still be less than the average movement that occurred after these events in the past. You see how this data is helping you formulate a trading plan. And it's not based on guessing what the announcement will be in advance. You don't have to do that. You can wait and have the benefit of hindsight to see, okay, now I know it came in as expected or higher than expected or lower than expected. And I can see in the past when that happened, what the movement was, okay? And then we can also look and say, well, what if it comes in below the forecast? What if instead of raising it 0.75%, they only raise it 0.5%? What might I expect to have happen? And the fact is, that has not happened. None of the recent data in the past year, it has not come in lower than expected. So we don't know. We don't have data to show you on that because it hasn't happened. So the likelihood of it coming in below forecast is probably a lower likelihood because it hasn't happened in the past 7 events or 8 events that we're looking at. The actual above forecast, it happened once. So we know that the majority of the time it came in as expected. But if indeed they do raise the interest rate higher than expected, what this data shows you is the one time that they did raise it more than expected, the movement went up nearly 100 pips. The pound strengthened within the next 4 hours by nearly 100 pips. So that there tells you a couple things. If it comes in as expected, the data shows the majority of the time in the recent history, selling might have been a smart idea with over 100 pip movement. If the data comes in higher than expected with the interest rate decision, if they raise it, let's say 1 full point, 100 basis points, 1 full interest rate point, percentage point, then when it happened before that it came in higher than expected, it went up nearly 100 pips. So you got a range in mind of how much you think it could move based on the past data. You've got directionality based on whether it comes in as expected, higher than expected, lower than expected, etc. Okay? Now, it doesn't mean that because in the past it went 100% up that it will this time, but you have to base your decisions on something, and basing it on real live data from past events, it makes sense to try and do that. So it's just one tool that we offer you of many that you can use to help base your decisions. And I'm not saying that you can't trade before the announcement comes in and try and guess what it will be. If you think right now, well, the majority of the time it does come in, 7 out of the 8 events we looked at there, it came in as expected. And we know that when it came in as expected in the past, the pound dropped. So maybe right before the announcement, you decide to try and go with those odds. That's up to you. You can trade before the announcement, after the announcement. It's different styles of trading. But what's important is you should have a reason for why you do that. Okay? And so your interpretation of this data, by the way, doesn't have to match mine. But the data is there for you to interpret and decide what you want to do with it. It's a huge time saver, because if you tried to go find all that data on your own on the past announcements and charts and measure the pip movements after each one for specific time periods on specific currency pairings, it would take you a long time to try and do that. So that work is done for you. It's a very powerful tool, in my opinion, to use this. And there are other announcements coming up as well. We can look at out of the US, trade balance, okay? That one's ranked as high volatility as well. So if we look at the volatility index on that, if these numbers come in, the trade balance comes in, and Euro USD is probably a good one to look at. I'll leave it on that as the pairing. We'll look 4 hours after. If I say the GDP comes, let's say it comes in bad, below forecast, 67% of the time then, the euro went up against the USD. Those are pretty good numbers. If you can be right 67% of the time, you're going to make probably really nice profits, depending where you put your take profit and stop loss. Now, again, the future is no guarantee. It's not guaranteed to copy what happened in the past, but this is pretty strong data that you have right at your fingertips. Over a 50 pip movement, 60% of the time in the direction of the euro climbing against the USD if these numbers come in bad for the US. Kind of makes sense, right? And you have 4 hours for that movement to occur. to go after this type of data. It's not necessarily something you have to trade in the first second the numbers come out, right? Which is why I like the longer time period, by the way. I don't have to rush. What if it comes in higher than expected? What if the numbers are better than expected? Well, then it looks like a 50-50 movement in the recent history. So that tells you maybe I don't want to trade if it comes in higher than expected, because the past data shows it's anyone's guess which way it would go. It was 50-50 when the data came in higher than expected. But if it comes in lower than expected, I have a statistical advantage maybe to say, okay, then I'll buy, because 2/3 of the time, approximately, it went up in the recent history when that happened. Okay, so just some ideas. And again, I have to reiterate, it doesn't mean it's going to have those percentages in the future, but we've got to, like I said, we've got to base our trades on something, and basing it on real data makes sense. A lot of traders, that's how they trade. And many times they can find success that way. And if it comes in matching the forecast, look, none of them did in the recent history. Out of those 8 events or so in the recent history for trade balance, none of them matched the prediction. So maybe the odds are it's not going to match the prediction this time either. So it's either going to be higher or lower. And maybe if you're looking for a statistical advantage, potentially, you're hoping it comes in lower than expected, because then you have a stronger idea based on the history of which way maybe you prefer to trade. Okay? Any questions at this point about those features or any ideas surrounding it? I'll pause for a moment. Okay, I don't see any questions popping in yet, although sometimes there's a bit of a delay after you type before it comes to me. So I'll keep an eye on the chat box there. If any questions come in, I'll address them as best I can. Now, what also do we have to help with fundamental analysis? Well, let's look at another tool. Trading Central. Let's look at Market Buzz. This is a really cool one. And by the way, I think we're going to be adding another feature that involves news as well. That will give information in another way. But this still is here also, Market Buzz. So some of these jump out at you as completely making sense. Twitter, trending, one of by the way, the bigger the circle, the bigger the bubble, the more it's trending. So Twitter trending, one of the top ones. Tesla trending, one of the top ones. Why does that make sense to me? Because of Elon Musk, who owns Tesla, now owns Twitter. He bought them, and there's a lot of talk in the news about him and the effect he might have on Twitter and its value, and also Tesla. So you can see, let's look at Tesla. All right, and Twitter's become privatized, so I don't think it's tradable anymore on the public. But what if we look at Tesla and we say, okay, it's trending largely. We understand maybe a general reason why. Let's see some specific articles. Well, here they are. Elon Musk plans to lay off half of Twitter employees. You could get a synopsis of that article right there at your fingertips. Okay. You could go on to the next one, and they're timestamped. This just came out 36 minutes ago. You can get article after article about whatever it is you're interested in, and it saves you so much time because you don't have to search for this information. Within 15, 20 minutes of reading these synopses of different articles that came out in the past 30 minutes, 1 hour, 2 hours, 3 hours, maybe you decide which way you want to trade on that instrument. Okay, in this case on Tesla or something else. And you have to understand, if people think that Twitter was a good investment for him, maybe that helps Tesla's value as well, because we're talking about the same owner here, right? Or vice versa. So there's connection between Twitter and Tesla, obviously. And we can look at other instrument classes. We can find articles on cryptocurrencies. What's the latest news on a specific cryptocurrency that we offer? Maybe you're interested in Ethereum, let's see, or Dogecoin. Maybe there's something that just came out, some news about that, and you're interested to see that before you trade. Well, here you'll see what's coming out. Something out of India about crypto. Ethereum's layer 2 scaling solution is talked about with a massive surge in activity. So you've got information right there that can help you decide what to trade on and in what direction. Very nice and efficient features for fundamental analysis. Then obviously, once you've got your idea fundamentally about what direction you might want to trade on different instruments, now you simply do your technical analysis and you bring up those instruments to place trades. So if indeed you say, okay, the GBP you think is something you want to trade on, let's say, and it's just an example. So because there's an interest rate decision coming in less than an hour, maybe you decide, you know what, the statistics in that economic calendar showed that if the rate decision comes in as expected, the strengthening's already done because it was expected that the interest rate would go up. Higher interest rates tend to strengthen currencies in general, and so maybe the strengthening is already built in prior to the announcement. Maybe that's why when it comes in as expected, the majority of the time in the past announcements, as we saw in those statistics, there was actually a pullback and the pound dropped. Okay, so and some of those expectations were expectations of decreased interest rates, and maybe some were expectations of increase. So they weren't all the same, but the result was the vast majority of the time from those recent 7 or 8 events, like 70 or 66% of the time or 70% of the time, whatever the number was that we looked at, it was a large majority, the pound dropped when the numbers came in as expected. So keeping that in mind, we can then try to do some things. So an example would be, okay, I'm going to go to a 4-hour candle. Let me see what's happening here. We see the pound actually has already been dropping. Down, 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 down. So a downtrend has already begun prior to the announcement. And so then we say, is this an entry point I like or not, if you're looking to short it? Or perhaps you say the opposite. Okay, it has dropped, but it's dropping prior to the announcement. Maybe since they're going to increase the interest rate, you decide, I think the dropping might actually result in a bounce when the interest rate is raised. You can interpret it the way you want. You certainly can understand that we're watching a downtrend right now and understand that, wow, that's happened in the past with these announcements if they come in as expected. And in fact, the downtrend continued for 4 hours after those announcements. So you have some basis to start to think about and rationale to start to think about, how would I trade on this? And maybe you say, okay, with the rate decision, maybe this comes climbing up before any further dropping. That could be, okay? Now, the other thing to think about is the fundamental news from the US with their rate increase this week. The US raised their interest rate by 0.75% yesterday. The USD has strengthened and pulled the pound down. Now, Great Britain's going to raise their interest rate, and so maybe the pound bounces back up. We've got kind of a seesaw battle going on here. Now, another thing you could do is say, well, what if I pair the GBP against the yen? Maybe you'll find an entry price you like better. And we look and we see, indeed, that's also a downtrend. So it's not just the USD pulling the pound down, because the yen is also pulling down the pound. What about Euro GBP? Euro's up against the pound. So the pound is weakening against everything we look at, okay? So if then I'm gonna go back to GBP USD, we can start to think about some rationale about fundamentals. So we understand the statistics show the majority of the time it's dropped 4 hours after the announcement. But you also could think about the fact that the US now has said they might be less aggressive with interest rates moving forward. They raised 75 basis points yesterday, but what they said was something different, that it was aggressive to raise it another 75 basis points in the US, but what they said was moving forward, they don't think they'll have to be as aggressive anymore potentially. So that actually could cause a weakening of the USD over time now, if folks expect that they're not going to do that large of an increase again on interest rate. And if that's the case, as the pound raises, as Great Britain raises the interest rate on the pound today, potentially 75 basis points. Perhaps we see a bounce from this drop, even if the pound eventually will drop further. So there's a lot to digest there. And sometimes you have to look at the timing of things. And so if I go to 1-day candles or 4-hour candles, if I think I like a support level, then maybe I take it. So we see this dropping, and it's broken this support here. Like I could call this a support level. We drag this line down. Right there was a bit of a support, right? It hit and went up, hit and went up. Now it came down and just broke right below that just now. You see the wick. It broke below and then came back up. So it's testing this support level. It hasn't clearly broken and kept going. It tested it, went below and bounced back up. So it's just kind of sitting here. So you might be thinking, maybe I wait closer to the announcement, see what the announcement is, what the numbers are, and go with what the statistics showed me from the first data we looked at. Also, you might be thinking leading up to it, I could do a shorter term trade to see if this might bounce back above this support level that it looks like it's trying to bounce back above. Maybe in the short term leading up to this announcement, the pound re-strengthens. It's possible, right? So you've got some ideas of things you could do here. If I want to buy on this, but I'm afraid it could really go flying the wrong way because there's a big announcement coming, then I can protect it with AvaTrade. So I could say, okay, interest rates going up soon. The anticipation of that might cause a rise. So let me buy on this. I'm going to protect this for the next 3 hours to get through the announcement and a couple hours after that. Okay? It only costs me, if I do a trade size of, say, 1 lot, only costs me $575 for that protection. If I have a balance of 95,000, that's a small percentage risk, 0.5% or a little more than that of the balance in my account. Whatever that amount is that you're willing to risk per trade, it calculates it for you what the cost of the protection is or what the risk is to your stop loss if you program a stop loss. In this case, I'll do the protection for 3 hours. I'll put a take profit maybe up before the next resistance level. So if I'm looking at 4-hour candles, where do I see the next resistance level? Maybe right here. Okay, this was a support, and then recently today it broke below that. So if it does come flying up before the rate decision or after it, maybe a take profit on a scalp type move might be 113.70. Okay, be over 100 pips up. 113, let's even do 50. Let's not be greedy. That'd be about 970 potential profit, paying about $575 for the protection. You might say, well, the announcement's only in an hour. I don't have to protect for 3 hours. I could protect for less, 1 hour. It's up to you, right? You might want to give it more time after the announcement to see if it'll continue to carry. So it's just an example of how you can risk manage and go after profits with a controlled amount of risk. Okay, so I'm going to go ahead and make that move as an example of a market move right before the announcement that's going to likely raise the interest rate in Great Britain. So leading up to that, maybe this bounces back up off this support level. Then after the announcement comes in, hopefully the buy position's in the money. Then you can go, if the numbers come in as expected, then you can think about going with that data from the economic calendar we looked at with a move after the announcement to potentially, let's say, sell if the data comes in as expected. Because 70-something% of the time or whatever it was, the pound dropped when the data came in as expected. Okay, so you can do multiple moves. Leading up to the announcement, you might expect strengthening after this drop down to a support level because the rate is expected to go up. So it might strengthen with that expectation in the next 30 minutes before the announcement. And then after the announcement, you can do the opposite to go with the statistics we looked at, right? So the point is you don't have to be trading in the direction I'm showing you right now or agree with what I'm doing. But the point is you see where the tools are and where to find the data, and then you make up your own mind if it makes sense to buy now and sell later or whatever the case may be. Okay, I want you to understand how to use the tools and make up your mind what to do. Okay, any questions at this point? I'll pause for a moment again. Okay, I don't see any questions popping up, so I must be clear. We've got a pretty decent number of attendees, and no one's asking questions, so that's good. That means I must be explaining things in a way that's understandable. Let's take a look then at maybe one more instrument. What if we're looking at something like gold? Why would we look at gold? Well, you know, when interest rates are increased, gold tends to drop, and it has for the really this whole year. If we look at one-day candles as an example, look at the downtrend on gold since the beginning of the year. Okay, when did this downtrend on the one-day candles begin? You see, I drew a line. You can see this little corridor where it keeps going up and back down, as a huge downtrend on the one-day candles. When did that begin? Right around the time the US said they're going to start raising interest rates. Even before they raised them, when they said they were going to raise interest rates to try and bring inflation down, that's when gold started selling off and the US dollar started strengthening. The opposite of inflation tends to cause gold to sell because people bought gold because of the inflation. So when central banks like in the US are promising to take measures to get rid of inflation, then the impetus isn't to buy gold, it's to sell it if inflation is expected to drop, because they bought the gold because inflation was going up. So we see what happened, okay? Down as interest rates went up in the US. Now we've reached a point where, look at this as a triple bottom. Look at the one-day candles. 1, 2, 3. 3 times at this price, bounced up once, bounced up twice, now testing it again. Hasn't bounced yet. Maybe it breaks it and drops further. But we have to think about what happened fundamentally in the US yesterday. They raised the interest rate. Yes, that is probably why we see this big red candle. Gold dropped further against the USD because the interest rate went up another 75 basis points in the US. But then what did they say? They said, hey, maybe we don't need to be so aggressive with the next moves. It's basically what they said in the FOMC statement after the rate increase. So maybe this triple bottom is telling us something, because it sure looks different than the rest of this downtrend, where we just didn't have that type of support level form in 3 spots on a support level. Okay, so maybe you say, let me take a shot at this. If I go to 2-hour candles, I can see that it's testing this support level right here. You see it testing it. It's pushing right here on this support level. Now, not to say that you can't put a pending order down here. If it breaks this support level, you could have a pending order to sell. Number one, that's pure technical trading, right? Fundamentally, why might it break? Well, interest rates have been going up in the US, so if more interest rate increases are expected, even if they're smaller, maybe you believe that's enough to make it break the support level and plunge further below 1600 even. And if that's the case, put a pending order here below this support level, and if indeed it breaks and drops, there you go. You got a trade running. So pending order could be an idea that makes sense, at least technically anyways, below the support level. A broken support many times means a surge further on. Okay, so one idea from a technical perspective is pending order down here. Now also from a technical perspective, since it didn't break the support level yet, you might say a market buy could make sense right now. Or if I zoom in a little bit, I could say if it starts an uptrend, then I'll buy. Meaning if it comes up and breaks back above, let's say this little support level. You see support, support, and then it broke below that here and started a downtrend. So maybe you say, you know what, I'm not going to buy in a downtrend. But if this comes back up and breaks back above this little support level, that confirms a reversal, and now we have an uptrend if it breaks back above this price level. So then maybe you put a pending order up here to buy, rather than trying to guess right now, well, it really looks like it could break that support level in the short term. You understand? So fundamentally, if you believe, hey, the US is going to be softer now moving forward with rate decisions, so maybe that'll weaken the US dollar against gold some. So maybe you say, I'll put a pending order up here. If indeed it breaks back above 1631, then I'll buy. So you'd say execute when price hits to buy. If it hits 1633, then I'm buying. Okay. If I put a take profit, maybe it's up at this high point up here around 16. Let's draw another line. 1668. So let's say 1665, just before that resistance up there, might make sense for a take profit. 1665. And if indeed you entered when it broke back above here, your stop loss maybe would just need to be below this support level down here. So down at like 1610, something like that, if you entered at 1633. So stop loss 1610, or wherever it makes sense to you based on the candles here. If it breaks above this resistance, triggers a buy, then it would have to come back below this support and then back below this low in order to hit your stop loss, okay? And if I say, okay, what trade size should I do? Let's say 0.1. Okay, how much would I risk? How much would I make? I'd be risking 230 and possible profit 320. If I said, oh, well, I'm willing to risk more than that per trade, whatever it is, 0.22 risks about 500. And if that's the amount I had made up that I'm willing to risk per trade or to spend on the AvaProtect per trade, then maybe this is the trade size that's right for me. Going after 704 profit, possible loss 500 in this example. And that's with waiting for a confirmatory uptrend before buying. Okay. Again, fundamentally, what's the idea behind that? Because they said they might be softer moving forward on rate decisions in the US. So maybe that starts to weaken the USD and allows gold to bounce back up. That's the fundamental thought process. But technically, we're waiting for a reversal and an uptrend before entering. So we're combining technical strategy with the fundamental news. Okay. So we're waiting for a confirmatory uptrend at the same time as trying to go in the direction of what we think the bigger picture could be for the US dollar. Okay. If you think it's the opposite, by the way, then sell, right? Like I said, you could put a pending order below the support level that we saw there. 4-hour candles. Remember, I drew the support level here. This was an old support level where it hit and went back up. If it drops below 1615 and maybe it's 1610, maybe you have a pending order to sell. And then your stop loss is back up here with your take profit down further. Okay. I'm simulating the buy idea, but you also could set up at the same time, by the way, you could do both. Put a pending order down there to sell as well if it breaks the support. It looks like it's trying to break that support. I think it could be one of those false breakthroughs because of the way the news is lining up from yesterday. I think it could break this support level, spike down, and then maybe come back up. But that's just a guess, maybe an educated guess, but a guess nonetheless. Any questions, comments before we end things today? Okay, well, thank you, everybody, for joining. Glenton or Gregory, yes, all of these sessions are recorded, and by tomorrow, this session will be uploaded to our YouTube channel. Okay, and my last session's already there, and all the other ones also. So you can check out other presenters as well that do live webinars during the week. They're also recorded and uploaded there. Pretty much each day, someone's live webinar is being uploaded there from the prior day. There's a request to look at crude oil. So let's take a look at that, and then I think we need to end things. Give you all time to set up before this announcement coming in, either to place some trades in advance like I did with the one, or maybe to look at the GD or the rate decision out of Great Britain that's coming soon, and then make a decision on what to trade. That position that I took is just kind of bouncing around, right? No big movement yet. We'll see what happens after the announcement. And then if there's an opportunity to go the other direction as well, based on that data we looked at. But let's look at crude oil. And so As you can imagine, crude oil has been a little bearish over the past weeks if we look at one-day candles because of the interest rate increases on the US dollar. US dollar strengthens, it pulls, in general, tends to pull commodity prices down, which was the point of raising interest rates. They're trying to bring prices down by strengthening the currency. And so that has had an effect somewhat. Crude oil's come down quite a bit. But now if they're signaling that they're going to be less aggressive with rate increases maybe moving forward, and also you've got the Saudis saying, hey, maybe they're going to cut production. Wow, maybe there's some fundamental reasons now for crude oil to go back up after all this dropping. I mean, if we look up here, we can see crude oil, it reached 129 a barrel or so, right? Way up here, 129 and change. And now we're talking, look at this resistance level on the one day candles. Resistance, it's trying to break back above 90, 89.9 right here. You might put a pending order right up here, a pending order above that resistance on the one day candles. If this hits, say, 90 and 50 cents, 90 and 60 cents, then that means it broke the one day candle resistance right here. You see here and here, it tried twice. So maybe you say 91 to be sure it's clear of that. Whatever's your comfortable spot to be convinced in your mind that it's on an uptrend again. If it breaks past this resistance, I don't see a clear resistance level after that until, let me try and slide this line down, until right here. So we're talking almost 94 a barrel. So you could get in at 91 after it breaks the resistance, and you've got a full $3 a barrel almost before the next resistance level. It looks small on the chart, but those are one-day candles. $3 a barrel is a big move. So if we can look at 2-hour candles, then it starts to look maybe a little bit bigger. Here's the entry, here's the resistance level we drew on the one-day candles. Here's the entry price, right, at 91. If it breaks clear of that resistance, maybe you have a pending order to buy crude oil. And then the take profit, we need larger candles to even see the take profit. Here's the take profit, 94. You see the resistance up near 94 just before. And so if it comes up, clears this resistance here, and makes it to 91, then if it triggers your pending order to buy, it looks like potential clear sailing until it gets up near here around 93.9. Okay? Now, there's no guarantee it'll work out that way, right? But the technicals line up nicely that this is a resistance level all the way back here. Look, resistance, resistance, again here, resistance, resistance, again here. And now it looks like it's trying to break above there, right? So if this gets up to 91, it cleared all of this resistance all the way back to here on the one-day candles or 4-hour candles. And it looks like an open path potentially to go near 94. Okay, so it's a nice little technical move, waiting for a breakthrough of the resistance, similar to if we're waiting for gold to reverse back up, like we demonstrated a pending order for. And if that triggers, you're looking maybe to take profit just before the next major resistance, maybe at 93.75 or something like that. And then you think fundamentally, why would crude oil go up? We talked about it. Saudi Arabia, others saying they're not going to increase production, maybe even decrease production of crude oil, which is the opposite of what Biden has been begging them to do. And at the same time, kind of dovish talk yesterday about not being as aggressive with interest rates, maybe moving forward in the U.S. That also could help bring the strength of the USD down some, allowing crude oil to potentially climb. So some fundamental reasons why, if this breaks this resistance, crude oil could be expected to rise, and obviously that would be a technical breakthrough as well of a resistance level, which technical traders would buy just because of that. So again, the idea here is we're trying to line up fundamentals then with a technical strategy to try and confirm what we're thinking fundamentally. Okay? Any last questions, comments before I end things with this session? All right, everybody. Looks like everybody's understanding. Good luck with the trading. There's a big announcement coming soon out of Great Britain. Get yourself set up either before or after, whatever your strategy is. We went over a couple of ways that you could go with that, and have a look at the pairings and the instruments that you think you might want to trade on. All right, everybody. Thanks for joining. Bye for now.